Hey traders, welcome back to another Sunday video. Each week we go over the markets for the week ahead and we talk about trade setups, ideas, things that I'm looking at, and of course, feel free to chime in the comment section below. Speaking of comment section, I want to ask you guys a quick question in the audience. What time frame do you guys place your trades on? I did a poll recently and it was really interesting to see the various results, but I want to hear in the comment section, what do you use in order to place trades? Do you use the 4-hour chart? Do you use the 15-minute chart? What do you guys use? Let me know in the comment section down below. Starting out here for the week ahead, let's take a look at what happened with gold. Now, some of you guys may remember that if you've been keeping up with the channel recently, I've been pretty bullish on gold, except this past week, I kind of gave up on my bullish idea for now. Let me go over that reasoning for you quickly. So recently I went long gold around this area and I went long around this area. Now in this first trade, I rode this move up and then I trailed my stop loss here. I was stopped out for a small profit, but then on my re-entry, when price broke underneath this structure, I was stopped out here. So I kind of bailed on my idea to be long on gold, and I'm very glad that I did because it proceeded to continue down 50 further dollars per ounce here. A very quick sell-off kind of unraveled shortly after my position was exited, which is great because again, this is what we're all about when it comes to this channel. We talk about risk management as a primary way to stay in the game. You know, you've got to understand that sometimes you're just going to get it wrong. I stopped out and I'm happy that I did because again, if I'd held that bag and, continue to hold on to it, who knows, gold could continue to trend lower. Speaking of that, let's talk about this recent price action. We're now zooming in. We're looking at the 4-hour chart. And you can see, again, we're starting to see some evidence of a lot of weakness in this market, right? We even tried to very briefly bounce off of this this mark here. Let's see, where was that price? That price point was around 1987. Tried to briefly bounce off of that and immediately return to sell pressure. So now as we retest into these zones here, there is a little bit of concern on my end in terms of how optimistic I am for the gold market right now. I'm not looking to buy this at this time. However, I am still fundamentally bullish. So let's do a quick breakdown on the gold market. So fundamentals, you have some debt ceiling concerns, right? This area, I would say I'm pretty bullish, right? Because debt ceiling concerns, banking issues, the Federal Reserve potentially on the cusp of pivoting here. I think all these things could have a really positive impact on the gold market. Now, sentiment, however, COT data is also very bullish. However, retail traders are very they are very bullish at this time as well. So that's a little bit concerning. And then technicals, I just think look very bearish, right? As mentioned before, lower highs, lower lows. Now, I want to show you guys here in terms of the smart money tracker. We do have the latest data in. Let's go ahead and make sure that we just refresh it here. So what we're looking at, I mentioned sentiment analysis. We're looking at what institutional traders right now on your screen, we're looking at what institutional traders are buying and selling. And what we can see here is that gold lost its #1 place. Now it's still very much percentage-wise long oriented. Now you can see it down in the below in this table. If this table makes more sense to you, feel free to always look there. But what we're seeing here is that in terms of a percentage basis, we take all the futures contracts that are tracked by the CFTC's Commitment of Traders report, and we make it into an easily digestible data visualization tool. This is what my company, A1 Trading, is all about. We build software for traders. So when I look at this gold position, 77% of the contracts tracked here are on the long side by institutional traders. Now, you've also got things like the euro, platinum, oil, and the Nikkei. All of these very long by institutional money. On the flip side, you've got the Japanese yen, you've got the S&P 500, the Canadian dollar, the 10-year bonds, and Australia, their currency, the Australian dollar. So these are heavily shorted assets. These are heavily longed assets by smart money, right? So this is kind of a cool feature that we have been working on a lot recently with the software, is just paying attention closely to the recent changes. So if we're going to narrow in on gold for a second, this is a bit concerning. Look at this. We had a drastic decrease in long positions in this current week. So we went from 270,000, so give or take, to now 255,000 long contracts open. And we had actually an increase in the number of short positions. So a little bit of a confliction there in terms of the recent moves that institutional traders did on a net by net basis. So looking at this, I'm just cautious on the bullish side. What I'd be looking for is breakouts, retests, and some sign that the institutional traders are really interested in staying long on this thing. Now, some of you guys may be wondering where you can get this data. There will be a link down below in the description if you guys are interested in getting access to the EDGEFINDER, which is our company's market software. It comes with a ton of data and again can be a very helpful tool for traders, whether you're a currency trader, commodities trader like gold, or indices, right? We have all sorts of stuff, and we even added crypto recently. So let's keep going. I want to show you guys the dollar. It's a bit of a flip story. And this thing continues to stay driving higher, right? Higher lows in this market, higher highs. When it comes to the dollar, this is the catalyst. This is the issue for gold, is that this strengthening dollar is really putting pressure on the gold market. And when we get technical here for a second, what you can see is that we've made a series of impressive breakouts past previous highs. And even though I'm not necessarily a dollar bull myself, I have to respect the resiliency of the dollar, just every single dip being met with opposition and strengthening higher. So as we retest, I'm not necessarily shorting the dollar, but I'm watching closely to see if we can actually start to get a fade away sort of move where we start breaking structure and turning bearish, looking for those lower highs, looking for evidence that sellers are strong on this one. Speaking of the dollar, let's go back to our chart that we've got here, and you can see the dollar is still relatively strong at 65% a long ratio to short ratio here. And then the most recent change, let's take a look. You can see that there was actually a decrease, and this is very interesting. A decrease in dollar longs and an increase in dollar shorts. So despite this thing staying relatively over the 50% mark where institutional traders are net long, it seems to be contracting. And that's an interesting story to watch out for, as I am looking to potentially short the dollar if we do start to see a break the other way. By the way, also, I mentioned this briefly, but if you guys do want access to the EDGEFINDER, the link is down below in the description, and you can actually get a significant discount off of the product. If you've been thinking about getting access to the tool, it comes with our smart money tracker, retail sentiment indicator, our bank signals, our watch list tool, which gives you signals for 30 plus assets and pairs. And it all comes with a one-time payment. We do not do monthly subscriptions. We don't like to, it's a lot of hassle both on the management side and also for people to continuously pay money for something. We offer it at a one-time price. And if you use that code today down below, YTVIP at your checkout, you'll get access to the tool for a significant discount. So check that out and grab access today. Speaking of retail, let's take a quick look at retail positioning. Here's the major currency pairs. We've got dollar Swiss and euro dollar. This is really conflicting. So you can see dollar here long, but also euro USD dollar long here. Dollar short here, right? Because you've got dollar Swiss, people are buying, euro dollar, people are buying. So they're buying the euro, selling the dollar. Very interesting to see that dynamic. Kind of a rare signal. Usually we see these two on opposite ends from one another as that dollar is a contender. But it seems like when we take a look at this chart, it makes sense, right? You've got euro USD down. And again, if you're watching the euro, this thing just looks super bearish. Any retests, I would say here, be very cautious that sellers aren't just going to continue to push this thing lower. For the breakout traders, watch for a break underneath the previous lows. This is a pretty clear zone. And a lot of breakout traders love to look for something like this to look for opportunities on. And again, you might get that. The euro just seems to be sinking against the dollar here. And it is also concerning that retail traders are so piled into a long trade as this thing continues to go down. As we know, retail positioning, I personally use it as a contrarian indicator. So if retail traders are all piled into at 77%, a long position on the euro, this has to keep me relatively bearish on the euro because, again, I want to be against the crowd that tends to lose money. Now, that's a bit more sentiment indication for you. Let's also take a look at this chart. We can see dollar yen. Flip side of this, dollar yen. Very interesting. So I had a long trade open on the dollar yen. I traded this inside of our Discord channel. So I'll show you this. So I was long dollar yen this past week. I actually ended up taking a profit on both dollar Swiss and dollar yen for 495 pips and 152 pips respectively. So I took profits literally almost at the top. It was I rode this thing from down low up to high, and it was a longer term swing trade. I mean, this was a trade that I took several weeks ago, but it was a longer term position. I'm still holding a Euro Swiss trade, which is down on my trade right now. But again, overall caught those beautiful long dollar yen and dollar Swiss trades. Now, dollar Swiss is a little bit interesting to me because retail traders are actually piling in now to a long position on this one. It makes sense. It's starting to dip. And as we know, retail traders love to try and buy sell-offs. I would imagine that if this price does continue to trail lower, retail traders are actually going to get more likely to get bigger positions on the long side as well. So an interesting one to pay attention to when you're watching those pairs. I want to talk about NASDAQ here for a second. Some of you guys are wondering, why is the NASDAQ so strong, and why am I bullish on it? I've been pretty bullish on the NASDAQ for those of you guys who trade it. Well, a big reason here is the outpacing here from the NASDAQ. If you are an index trader, why is the S&P 500? It's doing all right, but it's not doing nearly as well as this monster of a NASDAQ move that we see. Why is this? It comes down to two letters that everyone is going crazy about. AI, right? This is what some are calling the AI rally in the NASDAQ stocks, as the NASDAQ is comprised a lot of tech stocks, NVIDIA, which is a chip maker. You've got Microsoft and Google, all of them trying to get in on the AI game. And we're seeing a lot of potential efficiency in their companies due to AI. So as this market trends higher, question is, am I looking to fade this? No, this is a momentum trade that I'm looking to get involved in if I can. So I am watching this week to see if we get some pullbacks on the NASDAQ. And notably, another thing I want to show you guys on the Smart Money Tracker, let's get the update. We're at 57% long ratio here on the NASDAQ by institutional traders. So big money is actually pretty much interested in the NASDAQ. But then you look at the other two, Dow, S&P, there's some serious concerns here, right? Institutional money is actually net short. So it's an interesting divergence between the two, and I'm looking to play the favorite. I'm looking to play the winner here. Ivan and I discussed on a live stream recently that we like to choose that to go with the winner of the mix most of the time. So the NASDAQ right now is currently the winner. Not always is it of the US indices the winner, but right now it seems to be. So I want to show you guys also this fib here. You've got this 50% retracement. I've got my eye on this one as well as the 61.8. Both of these areas look very key for me this week. If we can get retests in those areas, I will be looking to try and get a long position going and see if I can catch a little bit of this rally alongside other traders. Now, I don't have any trades open on this one on a short-term basis. I do have a long-term position open on the NASDAQ, which is doing phenomenal off of this, but I'm looking to add it to my active trading account as well. So we'll keep tabs on that one. Speaking of my active trading account, I'll show you guys another trade that I'm in is silver. A little bit of a unique one. I'm long silver on my account. It's a small position, 150 shares at $21.56. You can do the math if you'd like on that position. It's a very, very small trade. But this is what I'm actually willing to add to. So I have two trading styles that you guys are probably familiar with. If you're inside the group, then you know I've got two trade alert sections. So you can see my next position trades. So this is where I'm longer term. I'm holding things. I'm building positions. It's more of it's like a swing trade to short-term investing channel. And then I've got also my next trades, which is just my active trades where I'm looking to trailing stops, manage positions, rather quickly looking to get moves in my favorite, that sort of thing. If you guys want access to either one of these things, you can get them access to them. Same code as before, YTVIP. If you guys are looking to join our Discord this week is a huge week. I'll go over that in just a second. We have a very big news week. We will be doing plenty of action, plenty of trading in the group as always. And if you guys are not already in there, then I invite you, come join us, get in on the action. It's been really, really hot recently, and we are looking at lots of trading opportunities this week. Of course, you'll get notifications directly when I take trades. If you guys are interested in something like that, it's not a copy service, but if you're looking to work closer to me, if you're very serious about this stuff, which I know if you guys are making it at this point 15 minutes into the video with me, I know that you're likely very serious and trying to get good at this stuff. If you want to improve, I am telling you, it is worth the money to take a small amount of money in the long term, pay for a membership, if it's with me or if it's with somebody else. I encourage you to do that because you might save yourself years of time. Once you're inside of our group, and again, I'm sorry if this turns into a sales pitch for a second, but genuinely, I mean this. Inside of our group, we have some of the best traders. We have some of the greatest community members. We've had people with us for years and years and years. People have gone on to get funded. They've gone on to trade seriously large accounts. I know several people within our group who are very, very successful with this stuff. And I don't want to take all the credit by any means because at the end of the day, trading is a solo journey. However, if you can join a group like ours or someone else's that you really respect and appreciate, do it because it is worth the money. You're going to save yourself more money getting involved in something where you can learn something. Join coaching webinars. Literally, our gold membership is a one-time purchase and you can spend all the time you want in our VIP webinars, asking questions, working with real traders, getting involved in the chat rooms, our educational portal. I'm telling you, it is worth the money. And I mean that genuinely. Of course, you should always do your own due diligence. You should always do your research, and I encourage you to do that. I don't want you to just buy it just because I think you should, but I do think you should. It is very much worth the money to get involved with a group where you can learn something. Anyways, we talked gold already. We talked dollar. Dollar looks super strong, waiting for that to crack. If we're looking at the S&P 500, am I buying the S&P? Maybe, but I prefer the NASDAQ, and I'm going to look for that pullback as my primary interest. There's that NASDAQ again. Look at that. Just a monster trade here to the upside. US 30, pretty ugly. Euro pullbacks look like selling opportunities. I'm not really a dollar bull, so I'm kind of looking other directions. There's other things I'm looking for. Gold breakouts to the upside, looking for pullbacks there. NASDAQ looking for longs. And again, I mentioned silver. Is silver on this list? I don't think it's in this. It may not be in this. No, it's not. We really should add silver. I actually have, I've traded silver off and on for years now. Why silver? A lot of traders might ask. Well, it's like the cousin of gold, and it is, in my opinion, one of the most oversold metals in the industry. Copper and silver have some similar traits in the sense that during a raging economy, the demand for these metals rises dramatically, more so actually than gold. In fact, silver is used in so many technological products, right? Whether it be iPhones or planes or whatever. There's solar panels. There's so many things that use silver, and they're finding more and more reasons for that. And yet, on a weekly basis, silver has traded sideways for a very, very long time. I think that it is massively overvalued. This is just my personal opinion. And I think that any metals run, what is kind of interesting here, guys, is that during a strong metal market run, for example, XAU, USD, we can cross this and check this out. So we're looking at the gold to silver ratio. Now, some of you guys may be familiar that in 2020, we had a run up on the precious metals market. Remember, this is the amount of silver to buy one piece of gold. During the 2020 sell-off, gold massively outpaced silver. But then, once the money started flowing in from the Federal Reserve and concerns about inflation started to ramp up, look what happened. It went from taking, the way we can read this, guys, gold to silver ratio, look it up. It's a cool, I might do a video about it in the future. It's very interesting. The gold to silver ratio shows us how many ounces of silver are needed to purchase 1 ounce of gold. During 2020, we went up to 126 ounces of silver to purchase 1 ounce of gold. And it crashed, imagine the difference, down to 62.2 at one point. So off a long-term basis, you get these crazy spikes where silver becomes very strong. If there's any serious concerns about hyperinflation or inflation period, silver has a run. And so I think that could be something of concern as we stare down the barrel of this debt ceiling stuff. Again, I've got a small position on silver, and I'm willing to add to it as I think it's undervalued anyways on a longer term basis. Again, it has not seen some of the same growth as areas like real estate, gold, etc. I could go on a whole tangent on this. Precious metals are fascinating. They're their whole their whole own can of worms that you can open up and talk all about. So regardless, that is everything I've got for you guys. Got some trades on this week that I've showed you, some things that I'm looking to watch out for. And remember, guys, get access to our software or our Discord or both using that code that I showed you on the screen earlier, YTVIP. Link is in the description. You get access to either one. And there you go. Guys, again, if you made it to the very end of this video, do me a favor. Let's do something kind of cool. If you guys made it to the very end of this video, comment the word silver. I've seen other YouTubers do this, and I find this really hilarious. When you make it like into a certain portion of their video, they ask you to say a keyword. If you type the word silver in the comment down below, I'm gonna know that you are a seriously OG fan of the channel, and I really appreciate it. You guys know I'm happy every day to get to do this and have an audience around this stuff. It is my passion, and I'm glad to know that a lot of you share this passion with me. And let's do this for the long term. Let's stick around. Let's keep talking charts. Type the word silver in the chat down below. If you do that, I'll try and heart your comment. And I remember names, so I really appreciate people who make it to the end of my videos. Thanks so much, guys. Have a great week ahead. We'll be here covering the whole thing for you, so make sure to subscribe. See you next time.